All right, so are you ready to jump into this deep dive on CE8?
Definitely. I'm ready to get rolling.
Awesome. We've got a ton to cover today, so we better buckle up. We'll be exploring CE8's third quarter performance for fiscal year 2025.
Sounds good.
Now, to get us started, we've got quite the collection of materials. We've got the press release, the investor presentation, their official financial statements. Plus, we'll be checking out the transcript from their earnings call and, of course, tackling some of those insightful questions you all sent in.
Oh, nice. A lot to dig into.
For sure. Now, it looks like many of you are particularly interested in how C8's been performing and what their game plan for the future is.
Right.
So why don't we jump right in and see what we can uncover?
Let's do it.
Okay, so just glancing at everything, it seems like CE8's navigating some interesting waters in the global market, wouldn't you say?
Yeah, absolutely. Especially with those raw material costs being so volatile,
Hmm.
that price of natural rubber has been a real wild card.
Right. Okay, so we've got this backdrop of fluctuating costs, but then, boom, we see CE8 with an impressive 11.4% year-on-year revenue growth,
Yeah.
bringing them to a cool R's 3,299.9 crore. That's got to be a good sign, don't you think?
Yeah, definitely a positive signal. And what's even better is it's not just price increases driving that growth. They actually saw a 7.9% increase in volume year on year,
Oh, wow.
meaning there's real demand across their product range.
Wow, that's interesting because it means they're not just riding the wave, they're actually grabbing more market share, which, for those of you following along at home, that kind of proactive growth could be a good indicator if you're thinking about investments.
Yeah.
But hold on, I'm also seeing something about their margins getting a bit squeezed.
Oh, you're right. Margin contraction was a key takeaway this quarter.
Mm.
And, those rising raw material costs we talked about, they played a big part there.
Yeah.
Their EBITDA margin, basically how we measure operating profitability, took a hit, down 387 basis points year on year and 64 basis points quarter on quarter. So, to put it simply, for every 100 rupees they're making, their profit is a tad thinner than last year.
Okay, makes sense. But I'm guessing CEA didn't just sit there and take that margin hit, did they?
No, not at all. They strategically raised prices and tightened their belts on costs. They tried to offset the impact as much as possible.
Okay.
But their CFO did mention some concerns about the international rubber prices being unusually high. So that's something to keep in mind. The big question is, will this trend stick around, or are we looking at a correction down the line?
Yeah, that's a great point. And definitely something for all of us to keep an eye on as things develop. Some of you had mentioned you're interested in their expansion plans. It seems they're not just holding steady, they're pushing for growth.
Oh, yeah, for sure. They're doing it on two fronts, expanding capacity within India and making some strategic acquisitions, really strengthening their international presence.
Okay, let's talk about that Indian expansion first. They got the go-ahead to boost their two-wheeler tire capacity in Nagpur. And they're undertaking those brownfield expansions in Chennai. Now, before we go any further, can you quickly explain what a brownfield expansion is? Just want to make sure everyone's on the same page.
Sure, it's pretty simple. A brownfield expansion means they're basically using their existing setup, facilities and infrastructure
Yeah.
to ramp up production
Oh.
rather than building everything from scratch.
Gotcha. Like they're optimizing what they already have.
Exactly, making it way more cost-effective than starting from zero.
Okay.
And that Chennai expansion is pretty ambitious. They're aiming for 35,000 to 40,000 passenger car tires per day, plus another 3,000 for trucks and buses daily.
Wow, those are some serious numbers. Sounds like they're all in on growing within the Indian market. But what about their global ambitions? I know many of you were curious about that.
Right, well, their performance in Europe has been a huge win.
Mm-hmm.
And now they've got their sights set on the U.S. market.
Oh.
But the real game changer here is their acquisition of Camso, that Canadian company specializing in off-highway tires.
Wait, did you say Europe already makes up almost 10% of their total turnover?
Yep.
That's incredible, considering they only started expanding there recently.
Right.
And with their plans to potentially push U.S. exports to 20–25% of their international business within the next few years, their global reach is about to skyrocket.
Exactly. It's a pretty exciting time for them.
Yeah. So let's go back to this Camso acquisition for a second. It seems like a pretty big deal, wouldn't you say?
Oh, yeah, definitely. The deal's worth $225 million, and it's expected to close in May 2025. The impact is going to be significant, that's for sure. For one thing, it's going to more than double the size of CE8's off-highway tires business.
Wow, more than double.
Yeah.
I'm sensing a theme here. First, that massive expansion in Chennai. Now this acquisition that's supercharging their off-highway tire business. They're clearly in growth mode.
Mhm.
But the big question is, how sustainable is all this growth?
That is the question, isn't it? We'll definitely explore that further.
Okay.
But before we get into that, let's talk about something you were curious about. CE8's commitment to bite-sized CapEx.
You know, that did catch my eye. What exactly does that mean, bite-sized CapEx?
It's all about their approach to capital expenditure. They've pledged about 1,000 crore rupees annually,
Okay.
which is substantial, but spread out over various projects. Shows they're being measured and controlled in their growth, not overextending themselves.
So being strategic and cautious,
Exactly.
which is reassuring given all the global uncertainty we've been talking about.
Right.
Okay, let's circle back to that Camso acquisition. It seems like a pretty big deal. What do you think?
Oh, it is. It is. The deal's valued at $225 million, and they're expecting to finalize it in May 2025. It's going to have a huge impact. It'll more than double the size of their off-highway tires, or OHT, business.
That's impressive. I'm seeing a pattern here. Massive Chennai expansion, a game-changing acquisition. CE8's going all in on growth. But is it all sustainable? That's the million-dollar question.
That's the one. And it's one we'll definitely unpack further.
Okay.
But before we do, let's touch on something else you're curious about. CE8's commitment to sustainability. It's a big deal these days for businesses and consumers alike.
Right.
So is CE8 just jumping on the bandwagon, or are they really dedicated to this?
Well, I'm seeing things about renewable energy, alternative rubber sourcing, even tires designed for lower rolling resistance to improve fuel efficiency.
Mm-hmm.
It sounds like they're approaching sustainability from all angles.
You're right. They're not just talking the talk. They've got ISO 2400 certification and ISCC Plus approval for their Halo plant. Those are some serious international sustainability standards.
Oh, wow.
And get this, they've also been recognized as a World Economic Forum lighthouse for their Chennai plant. Shows how they're blending Industry 4.0 tech with sustainable manufacturing.
So they're not just chasing profits, they're trying to minimize their environmental footprint. That could be a real game changer for them in the long run, especially as more and more consumers care about sustainability.
You got it. Consumers, especially younger generations, are really choosing brands that align with their values, and sustainability is high on that list.
Right.
CE8 seems to be paying attention and adapting to that shift.
So we've covered a lot already.
Mm-hmm.
Revenue growth, strategic expansion in India and globally, and their commitment to sustainable practices. But before we move on to the next batch of your questions, I want to pause for a minute. What are your initial thoughts? Anything jumping out at you so far?
You know, one thing that really stands out to me is their emphasis on premiumization. It's not just about selling more tires. It's about selling those higher value, higher margin tires.
Yeah, you're right. I noticed that too when I was going through their earnings call transcript. They're definitely making a deliberate move towards more premium products.
It's a smart move, especially with those fluctuating raw material costs we talked about. By focusing on the premium segments, they can justify higher prices and potentially offset some of that margin squeeze.
And they're walking the walk too. Remember that new scooter tire they launched, the Secure It? They're highlighting its extended lifespan without compromising grip. Sounds like a pretty good deal for consumers.
Oh yeah, for sure. It taps into that growing consumer desire for products that offer both performance and durability.
Right.
People are happy to pay a premium if they feel like they're getting their money's worth.
Exactly. And it's not just scooters either. They also mentioned some pretty interesting developments with their OEM partnerships, particularly in the SUV segment.
Right, that's a key market to watch. Remember, their goal to have 17-inch plus rim tires account for 25% of their OE fitment in the next few years. That's a clear sign they're targeting the SUV market where those larger tires and premium features are in high demand.
Yeah, it makes you wonder about the long-term implications. Securing those OE contracts could lead to a surge in demand for replacement tires down the line. It's a smart long-term growth strategy.
Absolutely. And it all circles back to their premiumization strategy. SUVs are often seen as aspirational vehicles, and customers are more likely to invest in those premium tires to enhance their driving experience and get more out of them.
Speaking of enhancing experiences, we can't overlook their Chennai plant being recognized as a World Economic Forum lighthouse. That's a big deal. It shows a serious commitment to Industry 4.0 technologies.
You're right. And it's not their first lighthouse designation either. This really shows how dedicated they are to using technology to improve operations, which can lead to gains in efficiency, less waste, and better product quality.
Those are some major pluses in today's competitive landscape.
Mm,
Do you think this focus on Industry 4.0 could give them an edge as they expand internationally?
I think so, definitely.
Yeah.
By optimizing their processes and integrating cutting-edge technology, they're in a better position to react to market changes, scale their operations, and stay ahead of the curve.
And it ties in beautifully with their sustainability goals.
Mhm.
It's pretty cool how they're streamlining operations and reducing their environmental impact. Shows that profitability and sustainability can go hand in hand.
Absolutely. It's a win-win. They're boosting their operational efficiency while minimizing their environmental impact. That's something that resonates with both investors and consumers who are increasingly aware of these factors.
Now, even with all these positive developments, we can't ignore the elephant in the room, that raw material situation. It's been a major challenge for CEAT, wouldn't you say?
Oh, yeah, definitely. That volatility in raw material prices, especially natural rubber, has been putting a real squeeze on their margins.
Right.
But, their CFO did mention they expect these prices to remain relatively stable in Q4.
Oh, okay. That's a bit of a relief after all the ups and downs they've been through.
Hmm.
But how much confidence do you have in that prediction of stability? Commodity markets can be so unpredictable.
It's really hard to say for sure. Global economic conditions are still pretty shaky, and any number of things could affect those commodity prices. However, it is encouraging that they've managed to partially offset the impact of those previous price hikes through their own pricing adjustments and cost controls.
So it seems they're not just crossing their fingers and hoping for the best, they're actually taking steps to manage those risks.
Exactly, and their decision to cut back on natural rubber covers during the quarter also shows they're being smart about their purchasing, waiting for better market conditions.
That's smart. Why pay a premium if you can potentially get a better deal later?
Right. Well, yeah, it is a bit of a calculated risk.
Right.
If prices suddenly spike again, they could be in a tough spot.
Yeah.
But looking at their past performance, it seems they're pretty good at navigating those market fluctuations.
While we're talking about their ability to manage risk and adapt, I can't help but think of their decision to restructure their business model in Bangladesh.
Oh, right, that was a big move. They took a pretty substantial write-down on some assets, but it allowed them to partner with a local distributor, streamline their operations, and potentially open up new growth avenues in that market.
Yeah, it goes to show they're willing to make tough calls and adjust their strategy when needed. That kind of flexibility is crucial in today's dynamic business world.
For sure, it speaks to their agility, their ability to learn and adapt.
Right.
Those are key qualities for any company trying to make it in this rapidly changing global landscape.
So we've covered CEA's approach to growth, their financial performance, and their commitment to sustainability and technology. We've also talked about the challenges they face, especially with those raw material prices. But as we head into the final part of our deep dive, I think it's time to focus on something you are particularly interested in, their international expansion.
Absolutely. Yeah. Their global ambitions are definitely a driving force behind their overall strategy. And with that Camso acquisition on the horizon, it's a topic we need to explore.
Yeah.
But before we get into the specifics of their international plans, I think it's helpful to understand the bigger picture of the global tire market.
You're right. What are some of the big trends shaping the industry, and how is CE8 positioning themselves to take advantage of those trends? Are they just reacting, or are they trying to be proactive and shape those trends?
Well, one of the biggest trends we're seeing is the rising demand for electric vehicle or EV tires.
Ah, yes, the EV revolution.
Mhm.
It seems like it's everywhere, even when we're talking about tires.
Right.
But how does this impact CE8 specifically?
It's a huge opportunity for them. But it also comes with some unique challenges. EVs have different performance characteristics than traditional vehicles, which require specialized tire designs. They need tires that can handle the instant torque, the heavier weight, and the increased range demands of EVs.
So it's not just about slapping any old tire on an EV. You need tires that are engineered specifically for those demands. What's CE8 doing to address this?
Well, they've been actively developing EV-specific tires, and they're forming partnerships with OEMs to make sure they're at the forefront of this growing segment.
I remember them saying they have a 25% share of the electric two-wheeler and four-wheeler OEM business in India. That's impressive, especially since the EV market is still in its early stages.
It shows they're serious about this, not just dipping their toes in, they're diving in head first. And as EV adoption keeps growing globally, those early investments could pay off big time.
And it's not just about those dedicated EV tires for the replacement market. I also noticed they mentioned a trend toward tires that can work for both regular vehicles and EVs.
Oh, right, those electric fit tires. That's a practical approach, especially given where the EV market is right now.
Hmm.
Having tires that can work for both types of vehicles gives consumers more flexibility
Mm.
and could help CE8 streamline production.
It's a smart way to bridge the gap between the two technologies as the market matures. But EVs aren't the only thing influencing the global tire market. Sustainability is becoming a bigger and bigger factor, wouldn't you say?
Absolutely. Consumers are looking for more sustainable products, and tire manufacturers are responding with innovations in materials, manufacturing, and tire design to lessen their environmental impact.
And as we talked about earlier, CE8 seems to be taking this seriously. Their efforts in renewable energy, alternative sourcing, and rolling resistance reduction are all contributing to a greener tire.
They're also focused on responsible end-of-life tire management, which is a crucial part of the tire's life cycle.
Right.
Remember their involvement in extended producer responsibility initiatives.
Right, where tire manufacturers take responsibility for collecting and recycling used tires. That's a positive step towards a more circular economy for tires.
It definitely shows a more holistic approach to sustainability. They're thinking about the entire life cycle of their products, from sourcing materials to responsible disposal.
Okay, so we've got EVs and sustainability as major forces shaping the global tire market. What else is on your radar?
Another big trend is the increasing demand for larger rim sizes, especially for passenger cars and SUVs.
You're talking about those big flashy wheels you see on a lot of cars these days.
Exactly. It's partly about aesthetics, but there are performance benefits too. Bigger rim sizes can improve handling and stability, especially at higher speeds.
And we know CEAT is on top of this trend. Remember how they're focusing on those 17-inch plus rim tires for the SUV market?
It's a smart move. By catering to this growing segment, they can tap into those higher margin products and stand out in a competitive market.
So we've identified EVs, sustainability, and those larger rim sizes as major trends shaping the global tire landscape.
Mhm.
The question now is, how does CEAT plan to navigate these trends and achieve its international growth ambitions?
That's the question we'll tackle in the final part of our deep dive.
Okay, so let's get into CEAT's international strategy.
All right.
It looks like they're taking a multi-pronged approach, right? Targeting specific regions, expanding their products, and making strategic acquisitions to get a foothold in those key markets.
Yeah.
Kind of like a global chess game.
Oh, yeah, I like that.
What do you think?
Yeah, I agree. Their moves are very calculated, very strategic.
Right.
Take their focus on Europe, for example. They've already built up a solid presence there,
Mm-hmm.
and it's become one of their top performing regions.
It's pretty impressive how Europe makes up almost 10% of their total turnover already,
Right.
especially considering they only recently entered that market.
Yeah.
But they're not stopping there. What's next for them in Europe?
Well, they're continuing to grow their distribution network,
Okay.
introducing new products that are really tailored to European preferences,
Right.
and strengthening those relationships with key OEMs in the region.
So it's not just a copy-paste of their Indian strategy. They're really adapting to the specific needs of the European market. It's pretty cool how they're basically speaking the local language, but in tires.
Exactly. And their success in Europe has given them the confidence to set their sights on another major market, the United States.
Oh, wow, the U.S. market.
Mm.
That's a big one, but also super competitive. How are they planning to break into that?
Well, they're taking a phased approach, starting with their off-highway tires, where they already have some footing through their current business and, of course, the upcoming Camso acquisition.
Right, right. So they're not just jumping in head first. It's more like building a bridge, starting with what's familiar.
Exactly. And they've been setting up regional distributors strategically, getting that valuable feedback from the market. They even mentioned having solid commitments from channel partners for FY26.
Mm-hmm.
So they're building a strong pipeline.
So it's not a throw it at the wall and see what sticks kind of approach.
Right.
They're carefully nurturing those relationships,
Mhm.
building a lasting presence.
And once they've established themselves in that off-highway segment, the plan is to expand, move into those truck and bus radial tires, and eventually passenger car tires.
Yeah.
It's a long-term strategy, but they're laying the groundwork now.
It's like planting seeds that will hopefully grow into a big U.S. business in the future.
Mm-hmm.
But let's not forget about that Camso acquisition.
Right.
Seems like a real game changer for their global expansion strategy. How does that fit into their overall plan?
Well, it's crucial. It gives them instant access to a global leader in off-highway tires,
Okay.
particularly in construction and agriculture.
Right.
And remember, CAMSO has a strong presence in North America and Europe already. Perfect alignment with CET's target markets.
Right. It's like they've got a VIP pass to the global off-highway tire market now. But what else does Camster bring to the table?
Well, they bring a lot of technical expertise, a premium brand reputation,
Mm-hmm.
and a loyal customer base.
Okay.
Plus, and this is important, they operate in a higher margin segment of the market. Fits right in with CE8's premiumization strategy.
Right. So it's not just about adding volume, it's about bringing more value and profit.
Exactly. And CEAG has made it clear that they're going to keep CAMSO's premium positioning and pricing.
Yeah.
They see it as a key driver for their international growth.
It's bold, betting big on a premium brand in a specialized market.
Mm-hmm.
But their track record, their vision, gives me some confidence they can pull it off.
It's a really interesting case study, actually.
Yeah.
How a company from an emerging market can leverage these strategic acquisitions to become a global player. It'll be fascinating to see how they integrate CAMSO and really leverage its strengths.
Well, there you have it. We've gone through CEX Q3 performance, their vision, their ambitious plans. What are your main takeaways from this deep dive?
I think the biggest takeaway is that CE8's a company that's moving forward. They're not just reacting to the market, they're shaping it.
Yeah.
They're driven by innovation, a commitment to sustainability, and that clear focus on growth.
They're not afraid of challenges. They're tackling them head on, expanding their capacity, entering new markets, and making those strategic acquisitions.
And their early investments in electric vehicle tires and commitment to sustainability put them in a great spot for the future. They understand that the world is changing, and they're changing right along with it.
So the question is, will CE8 succeed in their quest to become a global tire giant? Only time will tell, but they're definitely a company to keep an eye on. Thanks for joining us on this deep dive. It's been great exploring C8 with you.
It's been a pleasure. Until next time.